Hello and welcome back to this week's Time is Money, brought to you by MSN Money and Trade Monster, our sister company, where you can trade stocks for just $7.50 flat, no matter how many shares you want to trade, or options for just 50 cents. You can also set up a paper trading account over there. You don't even have to fund it, folks. How about that? And you can, of course, try all the strategies that I'm going to detail for you right now. So as we close out another very good week for the markets, let's take a look at some of the look-ahead stories for next week, starting with Corning, GLW. Now, what does Corning do? Well, in particular, those flat plasma screens that we see everywhere, well, that's what Corning does. That's what they make happen. And Corning shares moving up very nicely for the year. In fact, they began the year just below $10 and presently are at $15. When you look at that kind of performance, you wonder, why is everybody telling me it's been such a tough year? Obviously for Corning, it's been a pretty good year. Now, what would I do here? I would sell a put spread. Corning's trading right around $15 ahead of Monday's results. I would sell the 15 puts and buy underneath it the 12.5 puts. If you look at this and take a look at that risk-reward picture right there, that shows you a risk graph for what that strategy would be like. And as I said, if you open an account at Trade Monster, even if you don't fund it, you could follow along and see how that works out. So Corning is our first trade of the week on Time is Money. Take a look at that. I'm collecting a credit for selling a put spread. It's a limited risk trade, but I get to keep all that premium if the stock is 15 or higher, and I think they'll have a pretty good outlook. The next stock is Valero, V like Victor, L like Lima, O like Oscar, largest refiner in the United States. Valero is up for the year, but not substantially like Corning was. In fact, at the trough, it was basically right around 16.5. It's moved up to 21. It's a nice move, not the same as Corning's move. Here I like selling a straddle. That's the combination of the call and put. So if we take a look at the 22.50 strike, no, you know what? I'll even modify this little. Let's sell the strangle instead. A strangle is an out of the money call and a below the market or out of the money put. We're selling both of those, and I'm going to do that in Valero because I expect it to trade in a range. I expect when the results come out that then the volatility gets sucked out of Valero and we'll profit from that. So on this example, we are selling a strangle, out of the money call, out of the money put in Valero. Next one, Smith International. So we'll kind of stick with the oil and gas plays. Now, if you look, this also one of the hot sectors this year. Schlumberger had earnings on Friday. Those earnings were great. And Schlumberger moved higher by better than $3, knock on wood. Take a look at Smith International, SII, also oil service related. And if you look at how this stock has performed on the year, up about 18%. Nice year. I think it's got more gas in the tank, if you'll pardon the pun. So Smith International trading up around 26. I am in here going to buy the stock and sell the at the money calls. By doing that, which is a covered right, I keep the premium that I collect for that covered call, and all that just comes spilling into my account as long as we stay above the strike price. Now, if we go below the strike price that we pick, I'm going to be focused in on the 25s. If we go below that, then I'm protected because of the premium I collected down to whatever the premium is. So for instance, if the premium's $1.50, you'd take $1.50 from 25, the strike that I'm selling, I'd be protected down to $23.50 for a stock that's trading at 27. So right now, as we do this, it's of course Friday, it's ahead of those results, and in this case I'm going to be waiting till a little later in the day to put this trade on, and the stock is moving up through 27 at this moment, so keep an eye on Smith International. Ultimately I might end up buying the stock and selling the 27.50 calls in Smith International. Lastly, Travelzoo, TZOO. Price line's up 30% plus on the year. That's their big competitor. Travelzoo hasn't been moving that much. I like this one. It used to be a high flyer. In this case, I'm going to buy a bull call spread in Travelzoo. I'll give myself a little time. I'm going to buy the 7.50 calls and sell the 10 calls in June. So it's not just an earnings play. I'm setting up for a longer term bullish move. You see what the risk reward looks like that. I'm going to be long long that spread, limited risk with upside potential. I'm Dr. J from OptionMonster.com. Remember, this brought to you by MSN Money and TradeMonster.com. You can follow our updates throughout the week at Twitter.com/OptionMonster. I'm Dr. J from OptionMonster.com.